got a lifetime of knowledge.
Let me call Mimi.
Okay, but what I wanted to just quickly touch on before we get into it is that podcast that you sent me, which was, of course, now I'm going to forget her name.
Leanne Morgan, is that right?
Okay, Amy Poehler and Leanne Morgan. I didn't know who Leanne Morgan was.
Me neither.
Now I want to go watch her Netflix special. So funny. I was laughing out loud. I was like dying laughing in the car this morning. So funny. Such a great conversation. There is a really relevant quote actually that she brought up that is relevant to us and to this podcast. But I was crying laughing. They go, more women die from choking than men because they walk away from the table because they don't want to bother anybody. And like, if that's not being a woman.
Literally, like, no, I'll be fine. I'll be fine. Let me just step over here, and then they die in the bathroom.
I was dying laughing. I was like, of course, like that is just so fitting. But then also, Amy Poehler says when she was asking Leanne, what was it like to get into Hollywood as a new comedian?
At the age of 50.
At the age of 50, and Leanne was like, I felt so out of my depth. And Amy Poehler said, don't you feel like life is just a series of terms to keep you out of the room? And then once you learn the terms, you're in the room.
Yes.
And I was like, I do feel like life is just a series of terms to keep us out of the room. And that's why we're doing this, is to define the terms so that we love it. We have a space. So I was like, we have to send her an episode. We have to get Amy on, I think.
100%. What is stand-up?
Yes, correct.
I completely
agree.
Everyone
go listen to that one. It was hysterical.
Yes, Amy Poehler and Leanne Morgan. I also have to shout out Mia because she is the one who sent it to me. And she said, I think you're going to find this hilarious. So thank you, Mia. But yes, very excited about today's podcast and today's interview because we are doing What the Fuck is Venture Capital. But what's really interesting is that Lundie and I work parallel to venture capital. We have worked in the space of it for the last 10 years now. We do know a bit what's going on. But then when I was doing the research, I was laughing because when do you ever know what's going on? I was reading all the stats and I'm like, no, this word, don't know what it means.
No one ever knows. No one ever knows.
No one knows.
Yes, true. We've been also in the African venture space.
This is true.
For our entire career. So oftentimes when I'm like in New York or London and I'm like, I work in VC. People are like, oh, cool. And then dive into whatever's going on in North America. And I'm like, actually, I truly know nothing. So
they're like, oh, what deals have you done? We're like, oh, do you know Watu? Like, one of the biggest businesses in Africa, but they're talking about Skims instead.
Yeah, so we're bringing on,
cool.
exactly, an expert who has done deals with Lemme and with Oatly today, so I'm excited to get into it. But I sent to Sam Paps, one of our earliest listeners, when she was giving feedback, I said, well, today we're recording What the Fuck is Venture Capital? And she said, for $1 million, I could not tell you what that is. She said, you have reached your target market because for truly $1 million, I could not tell you what venture capital is.
Yeah, I was chatting about it with my mom last night. She was over for dinner and I was telling her and she said, yeah, I used to tell my friends you worked in venture capital and I could just see their eyes glaze over as soon as I said the word venture capital. So hopefully today we will unglaze each other's eyes and learn lots because I'm really excited about our guest, Anna, who's coming on. But before we do that, I want to dive into some of the facts because this is also interesting for us and context beforehand. So there's been a lot of talk in the news recently around investments, specifically around AI, which blew up once ChatGPT launched. So in the first half of 2025, the US, so this is US solely, startup funding jumped 75.6% to an astonishing $162 billion were invested through venture capital, driven by massive investments in AI.
Just to start from the jump, venture capital, VC, venture capital is the investment into startups, that being early stage businesses. The definition is capital or money invested in a project in which there's typically substantial risk.
Yeah.
There's typically a lot of risk because it's a newer business, so it's less established. So there's a lot that can go wrong and there's no way to know effectively if it's going to be successful or not at such an early stage.
And a lot that can go right, which is why people are putting money in, because they're basically gambling on these founders, these people who are starting these businesses, gambling, saying, I think this is a really smart person. I think they have a really smart idea. I think they're going to be the ones to crack this problem. And I'm going to give them $1 million to go out there and try and solve it. And hopefully they'll be so successful that my $1 million will turn into $100 million and I'll become very rich. And that's essentially the goal.
And how does your $1 million investment become a $100 million investment?
We're going to talk to Anna about this.
Okay, cool.
But bringing it back, Lundie and I have heard this fact before, but we'll be surprised to others, is only 2% of funding goes to women, female founders. So that is, of all the money that's out there, only 2% is going to businesses that are founded by women, which is crazy.
It's so crazy. And isn't there also a stat that says that women-led businesses or female founders are typically more successful?
Exactly. So that this is the case. So the crazy thing about it is that female founders outperform their male counterparts. So despite receiving far less capital, women-led startups often deliver higher returns on investments and sometimes more than twice the revenue per dollar. So they double the return for their investors over men. What I did Google, though, because globally only 10 to 15% of founders are women. So when you look at it, yes, 2% is terrible. It should be 50-50, but at the same time, only 10 to 15% are actually women.
That's a lower number than I would have thought.
I agree. But a lot of it is also around tech, and there's a lot of less women founding tech businesses. What they did say, though, is that if there was a mixed gender team, so a man and a woman, or maybe 3 men and 1 woman, however they compile it, if there's a woman involved, it goes up to 23% of funding. But still, there is this gap, and the gap is a result of the system is against us. A lot of the people who control the money are men, and they're the ones that make the decision. There's a really great example of Emily Weiss of Glossier, who turned her business into $1 billion business, but she went to hundreds of investors and most of them were male and they all said no to her. And the first investor to say yes was a woman. And she said the men couldn't understand why we needed another makeup brand. And they didn't understand the demographic she was targeting. So low investment in women, but also not a lot of women making the decisions, which is why it's so exciting to have Anna. So to that point, if we look at who's holding the money, which we're talking about, women now hold 18.6% of partner level and above roles. So within a firm, partner is one of the top levels there, and ultimately you become the decision makers. What's really interesting, though, is that 47% of angel investors are women. And an angel investor is someone who comes in really early, usually before you even go to a venture capitalist, before you go to a fund.
Angel investors are wealthy individuals who provide funding and sometimes strategic guidance to early stage businesses or startups in exchange for ownership equity. Unlike venture capitalists, they invest their own money, taking on high personal risk. So they're not affiliated with a firm. They're investing their own money from their own pocket.
That is really interesting because sometimes you need that one person to believe in you early on to get your business off the ground. And if that person is a woman who looks like you, understands what you're trying to solve, they're more likely to trust you, to Lundie's point, with their personal capital and say, hey, this is a great idea. I'm definitely believing you. I'm going to give you this $5,000 to help you get this idea off the ground. That could really change the game for female founders and really give them the opportunity to grow and eventually have hopefully more than that 2% of capital that's being given to them right now, especially, which is the reason why we started this podcast, because $30 trillion is being transferred to women. And so they're going to be making these decisions of where this money is going. So hopefully more women invest in more women, encourage more founders. I'm going to give you a little bit of background on Anna. So Anna is a partner at Coefficient Capital, a multi-stage consumer growth fund based in New York City. She will explain to us what consumer growth means. She's the founder of Rad Ladies, a high-touch network community of over 150 consumer founders. Anna is a Milken Institute Young Leader and has been named Forbes 30 Under 30, very cool, Entrepreneurs, 100 Most Powerful Women, and Business Insider's Rising Star in Venture. So she received her BA from the University of Pennsylvania. She is hilarious. I have had so much fun. I know her because I'm also in the Milk and Young Leaders Network, and she's so cool. She's done some really cool deals, which hopefully you guys will have heard about. And she's going to take us through what the fuck is venture capital. And hopefully we will come out with unglazed eyes.
Amazing. Let's
Yay.
bring her on.
Let's bring her on.
Please note that this pod is for educational purposes only. Nothing we say should be taken as financial, legal, or medical advice. Please do your own research, and when in doubt, ask an actual expert.
Okay, yay. Welcome, Anna. Welcome to Actual Experts. Thank you so much for joining us. We're so excited.
Thank you for having
Yay.
me.
I was telling Lundie earlier, I was so happy when I met you at Milken because I literally walked in and I was like looking around the room. We were at this reception, I guess. I don't know, like a early meet and greet. And then we started talking and I texted my husband, Steven. I was like, I met a new friend. So I was like, I loved chatting with you.
You saw me come into that meet and greet. I was going through it and I was like, I need a soft landing. I need a friend.
I know that feeling when you're at those events and you're like, I need a safe space. Like, who is going to be my safe space? And Caitlin and I
And it was
typically have each other, but when we're not with each other, you got to find your people.
Yeah. Yeah, I've got a friend like that. She also works in VC and she's just my ride or die. Like anything that I go to, I feel unsafe networking alone without her anymore because it's okay. Do I say this? Do I not say this? But Caitlin, you were my favorite pickup at Milken this year and I'm so glad to be here.
Yay, it's so exciting. Okay, and so you're in New York now, just outside New York.
I'm in Tribeca right now. You can see the delightful Hudson River behind me.
I was going to say, it looks very green for Tribeca. It looks gorge.
Nice. I feel like I need to properly connect you guys because it sounds like you both have this mutual absolute adoration for Taylor Swift. When you said, Anna, you're like, we need to talk about Taylor Swift. Lundie, literally, when the engagement happened, she sent the post to me within 30 seconds of it being posted.
I screamed. My fiance came running through the house, like in horror. I was like, truly like full body chills.
And I told my coworker, I was like, I've been wondering how I was going to feel at this exact moment for the last like 15 years of my life. We were in the middle of a deal meeting, and my coworker like taps me on the shoulder. She was like, "Have you seen?" And I was like, I had to walk out of the room.
I need to leave the office right now. I don't know what to do. Sorry to all of our early listeners who have given us feedback who are like, we love the episode, so interesting. Not interested in the Taylor Swift chat though. Maybe that's just me. And we're like that. Okay. Like 15 minutes must be spent on Taylor every episode. Thank you.
Okay. Sorry. No, as we said, bringing it back though, you grew up in Philadelphia and then you ended up studying philosophy.
Yeah, my major was philosophy, politics, and econ, which is a little bit of a catch-all, but my concentration was distributive justice. So that was like what I was really geared towards. And it was just a really cool way to understand econ less from like a finance and accounting level and more from a principled level of why do these tools exist? What is society moving towards? And it was really awesome. Cool. I recommend to everybody who can like have philosophy at some part of their life to tap into
What is distributive justice?
It's a great question. It can mean a whole lot of things. At the time, so I wrote my honors thesis on just this concept of what are the principal tools of finance that we have and how can we get them working in favor of closing the income gap and creating kind of more parity. Like we're not all starting from an equal starting point. How do we orient the tools that we're working with right now towards getting to that starting point or making it a little bit more of a that we can work towards.
Very cool.
At a high level, that was like distributive justice for me and still what I think of as what I'm trying to work towards right now in my current role.
That's very cool.
Did you not study then finance at all? Did you take any business or finance courses at school?
It's funny. I sent my friend a meme yesterday because we both studied PPE together. And it was like telling your dad you're studying philosophy in college. And your dad's, oh, that's great for the philosophy factory they just built down the road. So I ended up by my senior year I had a great mentor. So I worked at the Clinton Foundation through college. And one of my mentors was like, you need to take finance, accounting, and stats classes and then parlay that into whatever career you're going to take. But these are hard skills that you need to pair. So I ended up studying finance and accounting and you could take classes through Wharton's. I did that, but that was like very last minute and very on a pass-fail basis.
At least you did it. My mom, I studied international relations at St. Andrews, and my mom was like, take one business class, like something with numbers, like something applicable to anything in life. And I was like, no, I'm going to be a diplomat. Like, I don't need numbers. And now every day I'm like, why didn't I do that? So shout out to mom. Moms are
Yeah,
always
yeah.
right. Take the business
Well,
class.
take the business
Take the
class.
business.
Yeah, I
Yeah.
here.
Okay, I'll give you just a quick context going into this. We're going to dive deeper into what the fuck is VC. But just so you know, I have done most of the research for this and put the questions together. Lundie is coming in blind
Okay.
as the listener. So
Okay.
she will stop us
Fine.
and say, this is confusing if we go too deep and into the weeds. So
Okay.
with that, let's
Okay.
dive into going from philosophy to VC.
So good. Okay, I'm excited for Lundie's line of questioning because I'm very concerned that you're going to ask something that I don't actually even know.
It's
the
okay.
can
We've
cut
got,
it.
We've got Google.
Yeah.
We've been doing a lot of Googling.
So yeah, so I would say like my path was a very organic in retrospect. I ended up getting a job in banking. It was like my first time also living in New York, and I just realized that all these people's preferences and expressions were very clear through how they were spending their money and how they were making consumer choices. And that was like, you speak with your wallet, you vote with your wallet. Ended up finding this great firm out in San Francisco called BMG Partners. They were a growth kind of late stage consumer PE shop. So I can get into all the different like scales of venture that exist.
That's an acronym. I'm going to pause and explain for a second. PE stands for private equity. Imagine you and your friends spot a cute little coffee shop that's struggling. You all pull your money together, buy the shop, give it a glow up, better menu, chic decor, maybe a few TikTok ads. And then a few years later, you either sell it for a profit or keep it because it's now making great money. That's private equity, PE, in a nutshell. Private means it's not on the stock market, and equity equals ownership, means you're buying a piece or all of a company. The aim is to make the company more valuable so when you sell it, you and your investors earn a big return. Think of it like flipping houses, but instead of houses, it's an entire business. Anna used to work in consumer private equity. That means her firm would buy a part of a company, like Drunk Elephant, not because it was failing, but because it had huge potential to grow. The goal was to help make the brand bigger and better so that the slice they own would be worth a lot more whenever or if they decided to sell it.
But suffice to say, they were working on a lot of businesses that were pretty mature and that you would know of. Like we invested in Drunk Elephant, which is the beauty company, Sunbum, which is the sun care business, Seltzer, if you guys have ever had that. And then they were working towards ultimately the last part of growth of those businesses before a big acquirer. So like a strategic, meaning like Unilever, Procter and Gamble, any of these guys will ultimately buy those companies. We were working on just making those businesses set for sale. And I just loved that. Every day was a different project. Every company had different challenges. And my brain needs to switch on and off very quickly to different projects. So I love that.
And just to cut you off
stayed with
quickly,
it
when
and-
you say consumer in terms of the industry you were focused on, what does that mean exactly?
So we focus on consumer products and consumer technology. So we do basically anything where there is like customer loyalty. There is all of these like, things that you eat and drink and buy
Anything
and
that
put
like
on your
the mass
skin.
market, so like you and me on the street can go into a store somewhere
Exactly.
and purchase.
Exactly. Yeah. Yes.
Okay.
And I just fell into it. I had a passion for it. I really love back to the philosophy bit. It's almost like anthropologically studying people and their habits and remaining objective about it. I find so interesting as well because I might love a product, but it might not be something that the rest of the world is resonating with or can be scalable or the business model might not work. All of these things have to come together for these businesses to be really ultimately successful. But it's very funny trying to map all the data points to like what will hit on a consumer level versus, and it's often very different than what you or I actually think or feel ourselves.
Okay, I think that's
Yeah.
a good segue to bring us into starting at ground zero of what is venture capital, what the fuck is venture capital. And Anna, we spoke briefly before this about how best do we explain this. And you did a deal with the brand Vacation, the sunscreen company. And so we thought a really good way to take us through what is VC all the way from kind of coming up with an idea to eventually this investment and the goal of this investment. We can do it through the lens of the brand Vacation. So I'll let you take us through what that looks like, and then we'll pop in with questions along the way.
Totally. For those who don't know Vacation, it's a very funny sun care brand. They took a very different tact to how sunscreen was being marketed. It had gone very clinical. It had gone very prescriptive. And if you look at like the sunscreen ads from the 80s, 90s, it was more fun, retro. So they saw all of these consumers being talked to in a hyper clinical way. They saw an opportunity, or where nobody else was playing in the market, to make sun care fun again, which then would mean if you're enjoying it, you're probably using sun care more.
Who are the founders of it?
So, yeah, good question. So Marty is from Poolside, and he was friends with Dakota and Locke. And Dakota and Locke are two incredible minds, and they came from the advertising world. So they had worked on big advertising campaigns for all of your favorite brands like Corona, and they knew how people bought these products and what messing with them. They were all just friends. They're so imaginative on product development. Like they came out with the Whip sunscreen, which I don't know if you've seen this. It's gone very viral, and it's looks like whipped cream, sprays like whipped cream, but is sunscreen. So they're just constantly thinking ahead of what do people want, what will bring them joy, and what will keep people fun in the sun.
So how did they initially come to you? What was it that they needed money for?
So they needed money to start the business, to get product and inventory developed, to start to build a brand and marketing around, to start to talk to you as customers, find you. So they found me, I believe. Somebody, I think, told them this girl is into leisure and fun and she will understand. So we just got on the phone real quickly, and they had built this investment deck that was so silly and so different than anything that I typically see. You're looking at like pretty standard pitch decks most days. They had built an investment memorandum. Like, it was ironic, it was satire, it was just a version of the brand played out through the memo. And I understood what they were trying to do. I understand the products that they were trying to develop and the like path that they were trying to take that was different than everybody else. So
it was really early stage for them.
It was pre-launch. They didn't have a product yet. And that's what's typically called friends and family or angel investing. So that's when you just meet a bunch of people that maybe are not institutionally tied. They don't have a firm, but they are willing to back your idea on the back of a napkin and help. They're just helping you out and not expecting you to make them billionaires. We just kind of aligned on that level. I did like a small angel check into that business, and then they were off to the races. So then they got product developed, and that's typically when you're like 6 months, 12 months in market, you'll raise what's called a seed round. So then that is another kind of class of early stage investing where a lot of people refer to it as spray and pray, which means that you're spraying a bunch of checks. This is usually firms doing this rather than people, but you're spraying a bunch of checks, and the model is the law of large numbers. You'll back 100 companies. You'll assume that a large number of those companies are not actually going to work out or make you any money back, but of the 100, maybe one or two cover all of your losses, and then on top of that, make you some sort of return. They raised a small seed round. That was when they were finding product market fit, which is when you have a product and it fits.
And people buy it.
It usually means
People like it and they buy it.
They liked it, they buy it, and they're buying it again. And you might have 5 products that you put into the market, and you assumed that product A was going to be your flyer, your hero. And actually it's product C, everybody buying and talking. And so they were in that process of just collecting data points, establishing product market fit, raised a small seed round. And then when you're a little bit further along, then you are starting to spend like real money against ads to double down on the products that are working, to open up new channels for distribution, because it costs a ton of money to actually make the product, first of all, then get it into a retailer, then tell people about it. And my assumption always going into VC was that businesses make money, right? Like, you exist to be profitable, and then you recycle those profits back into building your business. But a lot of the times, if you're building that quickly and people are so excited about your product, then you're actually just it's called burning money. So you are net income negative.
Net income equals what's left over after a business pays all its bills. A company earns revenue, like sales or subscriptions, then it subtracts expenses, rent, salaries, marketing, loans, etc. The leftover equals your net income.
aka profit. If a net income is positive, means they've made money. If a net income is negative, they lost money that period, aka a net loss. For companies, a negative net income can happen because they're investing a lot upfront. Startups often spend more than they earn to grow fast. Their sales dropped, but costs stayed the same, or they have a big one-time expense, maybe a lawsuit or restructuring. It doesn't always mean the company is failing. Sometimes it's a growth phase, but if it happens for too long, investors start to worry.
And you need money from people like me to help you maintain your growth without slowing you down or hampering you because you're not making that money
So
yourself.
why would a venture fund, so in your situation, if you're looking at a business and that they are burning more money than they have, they're spending more money than it's the bank, they're going into debt, why would you then give them more money? Isn't that bad money management?
It's a great question. And also one thing is they're not going into debt.
Fair.
They're just losing money. And so that's where the venture capital, and by the way, this is like not a bit, this is like a very, it took me a little bit of actually being in venture to understand what was happening. So the way that venture funds make money is that when these companies ultimately sell, then our portion of equity that we've bought in these companies, let's say we own 20% of a company, but we buy it for $5 and then they exit and the company's worth $20 at that point, then we'll 4x our 20%.
When a VC fund says they 4x their investment, it means for every $1 they invested in a startup, they got back $4 when the company exited through a sale or an IPO. For example, if they invested $5 million and their shares were later worth $20 million, they have 4x their investment. In the VC world, this is considered a great outcome. Most startups fail, so a 4x or even bigger is a huge win, and it's what makes the whole fund successful.
So that's how we make money.
So in this case, for vacation, when you're talking about potential purchases, it could be someone like Coppertone might buy them. That's been around for a really long time, but then might want a cool new brand in their umbrella, under their umbrella.
Yes, I'm trying to remember who actually owns Coppertone. But yes, there are these big conglomerates that own all of these kind of different segments.
Johnson
like
and Johnson.
Yeah.
Johnson and
The big
Johnson.
pharmas or something.
Exactly. Brands need to spend a lot of money in order to keep themselves growing quickly.
And so in this figurative scenario, Vacation approached you for funding to basically plug a hole until they reach profitability, or in other words, until they get enough product into the market where they're making money from sales, and then they're self-sufficient, essentially. So you're like it's effectively a loan, but in exchange for a portion of the company.
Yeah.
So my question would be then, as a investor, why would you ever, this goes back, I guess, to Caitlin, your original question, but why would you ever invest or support a company that is yet to reach profitability or is yet to, you're basically taking a bet that one day they'll make a lot of money, and you support them in that journey effectively?
Yeah, it's such a great question. So we'll first look at a big market. Let's look at any market of consumer. I think, for example, pet care is a really exciting market. It's huge. A lot of people are spending a lot more money on their pets. So we think that's a growing market and will continue to grow faster than the average consumer index. We'll look at all the various companies and we'll say who's doing the most competitive, compelling thing that plays into that ultimate trend that we've identified. And do we think that this can be a company that ultimately one day is worth $1 billion? So we'll do all of our own risk assessment upfront, and then it's a risk. You pick your horse in the end. There is a chance that it doesn't work, or that you end up losing that money, or your return is not what you anticipate it's going to be. But there's a risk nature to the business, and sometimes it doesn't work out, or they don't reach profitability that fast, or they don't sell, or any number of things can go wrong over the course of a hold period, which is how long you have the investment. And you're just taking what you think is a very calculated risk assessment towards picking your winner and then doing everything that you can to help grow them.
Okay. And so in that, you're talking about, so you said seed and then went to growth. There's Series A and then a bunch of series in between. What is the difference between a seed, Series A, Series B, and then from then on in?
Yeah. In the most simple terms, seed is you're probably 6 to 12 months old as a company. You're not really sure how it's going to grow or what, but you have an idea. You have more kind of data points to suggest what it's going to become. And those checks are smaller. So seed stage will be like 3 to 5 million. The company might be doing $1 to $3 million in revenue, but they have a lot of opportunity ahead of them, and the excitement and the growth seems to be there. So you're taking that bet. Series A, B are similar, but you've found the thing that's working and you want to put more money behind that and double down. And then Series C onward is more that this company looks like it might be ready for an exit. What you need to do at that point is manage the business towards profitability, as we talked about, or just continue to create the compelling case that makes it by a big guy. And then a lot of times in consumer, you're not getting to the like very late stages beyond Series C, D, E. I work in the world of like seed through Series C.
Okay. And then when you're coming in, you're buying a stake in this business and you're saying, I'm buying this because I believe that this is going to become $1 billion business, a unicorn business. How do you know how much to pay? We'd love to hear from you how you think about valuations and how you say how much a company is worth.
It's so interesting to break it down to parts because so valuation is often just a negotiation. There's pretty rough benchmarks and parameters that you can use at each stage. The easiest way to value a company is to put a multiple on it. What that means is, let's say a company is doing $1 million in revenue, and for seed stage companies in a specific category, most of the deals that get done in that category are at a multiple of 3 to 5 times revenue, which is baseline for consumer businesses. So if the company's doing $1 million, it's worth $3 to $5 million. At this Series A level, the multiple tends to come down just because the return potential of the company is coming down as it scales. So the multiple changes over time.
So there's benchmarks that you're working with, and then obviously you're digging in deeper to the details of the specific business to see if that is more or less a good fit.
Yeah. If it's warranted, if they've earned that multiple. And then a lot of times it then becomes a negotiation because the company will say, actually, the reason we're different than the whole baseline or benchmark that exists is because of this. So we're worth more than that. And then we'll say, we actually have ownership parameters that we need. So we need to own 20% of the company. So the size of check that we're writing, it has to be worth this. So it's very art and science. It's very much, you come up with a scientific valuation that's fundamentals driven. It's based on the numbers of the business and what you think it'll return. And then you start to get into the conversation bit of it, which is where the art kicks in and the negotiation and deal structuring comes in. And ultimately you land on hopefully a fair place that's like the clearing rate.
Okay, so it sounds like someone could go out there and they're trying to raise money and they go to a bunch of different investors and they say, we're making $1 million a year. That's our revenue right now. And we think we're worth $10 million. And then Anna, you could say, oh, I respect that you think you're worth that, but we just invested in another business that's doing something kind of similar and we only paid, we only think they're worth $5 million. And so that's what we're willing to put the price tag on you at based on all of the data points that are out there. And so the art of negotiation comes in between they think 10, you think 5, and maybe you land somewhere in the middle, but they find a balance.
Yes, that's exactly it. And I think the part about growth that's fun is you say, listen, we'll give you maybe the benefit of we think 5, you think 10, let's say 7.5. Then once you invest, and I'm a part owner in that business, it is in every incentive that I have to make that company worth as much as possible. So when you're aligned on that basis, then growing what the valuation is over time becomes like a teamwork oriented kind of marching order. And so that's where in growth, you make your money by helping the company grow from being worth 7.5 million to 30 million. So you're on the same page and growing. It's teamwork.
And if I'm a founder, is it in my best interest to shop around to a bunch of different investors and say, we're worth 10. Anna said I'm worth 7. Caitlin said I'm worth 8.5. am I looking at that number alone because I want to be worth the most? Or if Anna can provide me with some other type of like maybe non-monetary support or connection or whatever. So you're, as a founder, you're also weighing up the deal in terms of what valuation they can give you, what they'll pay you for that percentage of your company, but also a bunch of other kind of factors.
That's perfect. So exactly what I was just saying, which is it's in our best interest to make the company worth as much as possible post-investment. Then as I'm justifying my pitch to you, my deal to you, I'm saying I'm going to bring you the best talent to help grow this company to make it worth more. I'm going to bring you new distribution channels to make it worth more. So at certain points, companies will say, okay, it's not worth it for me to have this guy over here who's not going to do anything for me call my business worth 10 million today, but only help me get to 20 million. Or Anna over here who says it's worth 7.5 million, but wants it to get to 30 and is going to do everything in her power to get there. So there is some, for founders, it's a tricky scenario to be in because you obviously want to be worth the most, but you also want the partners on board that are going to help you be worth the most when it matters most. It's like dating. It's very similar. You're like, okay, I've got this one over here. What do I do?
Yeah.
Do I go back into the market? If you have an investor who doesn't understand why you exist or what you're trying to do, then they'll just happily derail the company into what serves their return purpose and not really care that you really want this one product out there or you care about this message. So it's all a kind of blurry alignment of different principles and objectives, but you try to get there.
And it's really interesting because Lundie and I had this when you're talking about finding the right investor for you too, and what is the right venture capital firm for you to join. The investor felt so important. Lundie and I both went through multiple fundraising rounds at the last company we worked at. We were raising venture money so that we could hire more people, hire more expertise. I found there were certain investors we had that I could just WhatsApp and say, hey, I'm trying to get a hold of this person. Can you connect me to them? And they would respond immediately and say, hey, and make a 3-way WhatsApp chat within the next 5 minutes of me with that person connecting me. And that was so valuable. And to your point of we're trying to get our business to that next stage and be more valuable. It's also the interest of the investor because ultimately that makes their money worth more. And it's just such a value add having someone who understands you as a person, understands your business, and can help you grow both personally and professionally. And finding the right investor, to your point, is such an art.
How big is your portfolio? How many companies, meaning how many companies have you invested in?
Oh, that's a great
I ask
question.
because like smaller portfolios then maybe get more individualized attention and support versus bigger portfolios.
So at Coefficient, how big is the portfolio there?
Yeah, probably 15 companies with more on the way. And we have 2 funds. We have the earlier stage fund, which is Series A, B focused fund. And then we have the late stage fund, which is more that Series C plus focused fund. You're entirely right. Like the more kind of concentrated you can keep your portfolio, the more support you're able to give to each company. And so we try to take a very thematic approach. We're very concentrated. We won't invest in overlapping competing companies because when we have picked our horse, then we are like behind that horse 100%. And we laugh that we're just always on. Yeah. Like I don't leave work and turn off, stop doing work. Anybody I meet, any conversation I have is a potential to keep my portfolio companies growing and moving. And especially in the consumer space, like everything is an opportunity. And like making sure that I'm constantly talking to every strategic saying, what are you missing in your portfolio? Do you need a clinical skincare asset, or do you need something that's just like viral all the time, or whatever they're solving for, I am then solving for as well with our companies, or relaying those messages. You'll take a board seat often when you invest in a company, so you're checking in with them almost daily for us.
To take a board seat at a company?
So, yes, often alongside investment, when you become like a partial owner of a company, then you'll join the board, and that way you have information rights, which means you'll get their budget, you'll get updates on any new products, new distribution that they're opening up, or big level hires that they're bringing in. So you'll often just have like approval rights over big changes that the company's making so that you're all staying on the same page.
Awesome. Okay, so then we were talking about the funds. Where does the money come from to make these investments?
Yeah. So the money for funds comes from what's called limited partners. And these LPs are often huge institutions that are invested in public markets. They're invested in private asset classes. They're invested in real estate. So they have these like massively diversified portfolios. A lot of LP capital at the fund level comes from, at least in US, North America, it comes from endowments, universities. So if you went to a big college that has a pool of capital that the college is trying to make money and they need to get a consistent return profile, then they'll invest a small bit in us. They'll invest a small bit in any other number of firms. And so we'll get some capital from university endowments. Pension funds are big investors, union of teachers, policemen, all of these kind of big pools of capital that exist that are more looking for stabilized, diversified returns, invest in private funds. So it can come from oftentimes there's a thing called family offices too, which is if you have been managing generational wealth for somebody that, I don't know, invented the elevator. I don't know. Like you probably are like collecting all of this money constantly on royalties that you then need to reinvest somewhere to continue to pass that family wealth forwards. Family offices will invest in funds. So it can come from a lot of different places. So in a sense, we are managing capital on behalf of a large number of people, and then they're managing all these other assets as well. So we're playing our small part in their overall capital allocation strategy.
So if I, as an individual, said, hey, Anna, I love consumer goods. I want a seat at this table. I want a piece of the pie. Can I put money with your fund? Is that an option? Can anyone put money with you or invest with you?
I guess theoretically, maybe, but where funds will often differentiate on who they accept capital from. So I think in terms of where we would like to accept capital, it's really institutional blue chip kind of investors. And that is a point of pride, I think, for a lot of firms, is where they're ultimately trying to generate returns back to and into. And we love blue chip. They call them blue chip investors.
Yeah. Okay, so it seems like it's closed door to the everyday person. It sounds like that it's hard to get into the venture world. Say I wanted to put $10,000 into certain funds. If someone was thinking like that, what would be your recommendation for them if they were saying, I want to get a seat at the table?
Yeah, so there's interesting option. Crowdfunding has become like a legitimate way to participate in for the everyday investor. There's a great platform called Angel List, for example, where I think you have to sign up as an accredited investor, and there's things that you have to qualify for in order to be considered or deemed an accredited investor. But you can participate you can almost join like a club, and there's people that have these syndicates. It's called a syndicate that they'll put together for a deal, and they'll send a deal memo on Angel List, and they'll say, this is the that I believe in, here are all of my reasons for investing. And you can choose to pledge $1,000, $5,000. So there's lowering, not standards, but qualifications needed in order to participate as an individual in some of these earlier stage rounds now. I think for like regular people, it's just a matter of networking and getting to know who's building what, and reaching out on LinkedIn or whatever it is, and just getting to know founders, because you can hear that pitch early. And if you know a cool founder building something before they hit the actual market, then you can weasel your way in and find a way to participate. So some of it is just like grunt work and sweat equity.
Totally.
Okay, cool. So I wanted to chat about, you invested in Lemme, which is Kourtney Kardashian's company.
Yes.
What was differentiating or exciting for you doing that deal?
Yeah, Lemme is a great business. A lot of the innovation in that business, first of all, she had Poosh, which is her wellness blog for a long time. Yeah, so a lot of it was just organic, natural fit, where there was a great alignment between what she had been writing about and evangelizing organically for many years into what ultimately became the product version of it. Form factor innovation there was also a really big point. So
What is form factor innovation?
Form factor is, so if you think about any number of vitamin supplements, you're probably taking them as pills. You're probably tired of swallowing 6-7 pills every day and wondering if there's going to be some sort of outcome to that. And her form factor innovation was same, better efficacy, in a more enjoyable format, which is the gummy vitamin, easy as candy to just eat and consume every day. And a lot of what she was paying attention to as well was the really interesting ingredient trends that people were excited about or willing to try. They're first to market on product innovation in a lot of different segments. A lot of their customers are following her personally and her wellness journey. And so it's a very natural extension of her own brand. And it's just really efficacious product. So everything that you try from Lemme works, and it does what it says it's going to do. I was actually saying to somebody, my mom was going through radiation recently, and she had started to lose some of her hair. And I brought her the Lemme Grow vitamins, which are the hair growth vitamins. And she was like, you need to stack me up on those. Like, it's working. It's all coming back. And so they do what they say that they're going to do. And I think that, again, to the point of like emotional resonance with customers, it's, if you're a brand, you're making, and you have to keep the promise when you're making claims and when you're making a customer sale, it's an emotional connection with that person. So when all of those things are fulfilled and that promise is kept, then you create a halo. And I think they've been able to do that really well with a lot of their customers.
Very cool. That's very cool.
Amazing.
Yeah.
I wanted to chat also a bit about female founders. We spoke about earlier that only 2% of funding goes to female founders right now. And around 18% of decision making is women at the table on the investment side. What are you seeing right now that is getting you excited about more women at the table? And are you seeing any changes?
Yeah. What are you seeing from the inside? Not as much as you'd like, probably. Ours.
Yeah. It is. The stats have remained annoyingly over time. And I think there's been a good amount of media, fanfare, press, and there's really like great organizations now that exist to help elevate both female investors and female founders as well. But they haven't really budged a ton. So still work to be done.
Why do you think that? Why do you think things aren't changing?
I think it's a little different in consumer because I think a lot of like 80% of household choices or consumer choices are made by women. So I think there's just a natural right for women to assert themselves. But I think a lot of it is just there's not that many role models. Like I can count, I've had one female boss, I think, over the course of my career. And I think there's just not that many people to look towards to say, I want to be like her. And there, on the founder side, there are a lot more founders in consumer that are women, but I think you need to have women at the other side of the table that understand what you're building. And if a lot of in consumer, what you're building is ultimately something that you're selling to a woman, a lot of that has to be some sort of emotional resonance. What I always encourage female investors to do is to identify the problem that you wish was solved for you and go out and solve it. I was really annoyed early on in my career at all these women pitching me, and then they all had great ideas, but they were disparate and not connected to each other. And I was like, if they can just be connected, I can't solve all of their problems and relay all of the things I'm learning from each of them to each one individually. So I just put them all in a group. And that is like a network that I've started, and it's 10 years running now.
That's awesome.
And they do a lot of resource sharing. It's great. And
that's
so,
called
but
Rad,
it's
Rad Ladies, right?
Yeah, that's
Love.
Rad Ladies. It's a Slack channel. It's popping off all the time.
Love.
People do get-togethers and events, but what a lot of they're doing is just open sourcing information that they need or wish they had. So the people are sharing cap tables and they're sharing angel investors, because how many people have $50,000 to just put into a new concept or a company? A lot of people don't start with that like network, and they share each other's angel investors and help to create a little bit of a capital raising flywheel around each other. They're sharing talent. Like if somebody had a great marketing or copywriter or somebody that they've now had to hire above because the company's grown, okay, how do you help that person find their next thing at the company over here?
Cool.
So
how does someone
I
join
think
Rad Ladies? Is there a screening process, or is it a pretty open door?
No, I am the screening process, which it's a very soft screening process. It's just founders that I come across that have a great idea and a great concept, and something that if I look at, I'm like, I would get behind this. Like every company I can tell you in there, if I had $1 bajillion, I'd be putting money into. And so the screening process is really only, are you willing to help other people as much as you're willing to receive help in this group, because it exists. And is it something that it's an idea or a business model that agnostic of who would have started it, do I like love and do I think needs to exist in the world. And so it's cool for me to have it come to life because it's like all of the companies that I want to exist helping each other succeed and grow.
So cool.
But I think all female investors can start their own version of Rad Ladies and create their little network hubs. I can't scale it past a certain point. So I encourage all like women investors who are coming up to start their own version of it or whatever they think needs solving, that they can just get a little bit more activist.
Yeah. No, I love it. I think even Lundie and I, to our point of speaking about earlier, having a safe space in the room, it's usually because we were the only women. And so you go to this room of projecting yourself being like trying to have a presence in a room filled with men. And your safe space is usually the other woman in the room. And Rad Ladies is a great example of a safe space to ask the questions that you might be too embarrassed to ask a group of men. Even if we love men, like we're married to them, we're dating them, like they're amazing. But
we've had
sometimes
great bosses, we've had great colleagues, and even still, we turn to each other to be like, what did that mean? And I'm still confused. And where do we go from here? It's a big.
Yeah, I also think men really want to help in the way that they can. They just don't know how. So if you can be some sort of conduit for like, okay, this is exactly what you should do. This is how you should think about things, and just listen to other people's worldviews. There's huge momentum and appetite to elevate women in this world. And so it's just making sure that you're being constructive and you're thinking about that rather than corrosive.
Yeah, big inspiration behind the podcast.
Yes, exactly. You mentioned that you have had a few mentors through the years. What is the best advice you've been given as a female investor moving in the space around investing and raising capital?
Ooh, good question. And I would not have been prepared for this had I not just answered this for an undergrad yesterday who I was like, what would I say to that? I think my piece of advice is like, play to your strengths. I would say going back to the banking days, I really wanted to cover up for things that I thought were my shortcomings or be really good at things that I was bad at so that I was good at everything. And then it was a little bit of a futile exercise and you don't enjoy it. It's not, I think the things that naturally give you joy or naturally intellectually engage you are things that you're going to be always on about and be always excited to offer to other people. So best career advice is just, for me, is play to your strengths, do what naturally fills your cup, brings you joy. I love finding talent and connecting my brands with like new growth opportunity. And that just brings me so much joy. So I spend a lot of my time all day just doing that. And I can wake up basically saying that I'm excited to go to work. And I feel as though like my day will be well spent and I'll come home happy because that's what I've done. And I think you'll naturally thrive at the things that you are joyful about.
Lundie and I speak about that all the time. We were chatting about even work right now that we're doing this podcast and it actually is so much fun. And we end up spending our weekends doing this because, to your point, it fills your cup and there's this excitement of like the meaning behind it of, oh, we want to be able to convey this knowledge to more than just the three of us on this Zoom call and be able to share with our friends when they ask us like, what the heck do you do? And so it is so great to be able to do something, or even if it's a side project, something that you really love.
Well, kudos to you guys for starting this because it's so fun to also, everybody else is semi-ignorant about things, but we're not willing to. I listened to your egg freezing one and I was like, God, I just did this process 3 months ago. And if I had known half of these things, it would have just been way.
Congrats though
easier.
for getting through
Thank you. Oh my God.
I can imagine.
Tough, miserable process. But I think all of the things that Dr. Lucky said, I was like, that was obvious. Like in retrospect, had I known that, I wouldn't have done it.
You don't know what you don't know.
Obvious. Totally. You don't know what you don't know across all the industries, all the things.
Yeah. So then in that vein, and if there's one thing that you think every woman should know about VC, what would that be?
Ooh, one thing that every woman should know about VC. I think that it's just very team oriented. I think a lot of people have a misconception about VC that like all the VCs are building brands and it's an egoism thing. And it's actually just, no, you're on 10,000 different teams every day. And like, where can you be the best support player, the best like alley-oop provider? And that to me is just so fun. And you learn from so many different people. And the networking of it is like insanely fun for me because I soak up like any information that I can get from people that I come across every day. And so you just get this chance to be on a million different teams, which is so fun.
What I love about that answer is something that I think Lundie and I have had a lot of conversations about is I think sometimes we're told that soft skill is valuable for only so long. You need to have the hard skills of crunching the numbers and getting deals over the line. And it's great to hear from your position how much of a role being a good connector and spotting great people actually is valuable in an industry like venture.
Yeah, I think the hard skills are table stakes. You have to be able to do them, and that gets you to a certain point where then you have liftoff, and it's all about just being on a team and being a great connector, mentor, etc. That to me is like where most people, I think it's easy to go and learn an LBO on Excel and teach yourself numbers, but do you really have a reason for being in this day in and day out? It's a 24/7 thing. It is always on.
And it's harder to teach people skills than it is Excel spreadsheets. So I feel to your point, like leaning into, I used to have a lot of insecurity around my, I think, biggest strengths being those soft skills. And I've learned a little bit more through the years to lean into that and not shy away from that because
it's your superpower.
Yeah.
No one works a room better than Lundie Strom. I will say that.
She is very
good. I can tell. I'm like already enchanted by you and need to talk to you about Taylor Swift for
please. There will be lots of drinks had next time I'm on the East Coast. But I wanted to add in one more. Typically, we end the episodes by saying what's one thing that you think all women should know about the topic. But I did just want to, if there's a woman listening who is interested in raising venture capital or has a great idea and doesn't know where to start for funding, what would your most practical piece of advice be for her?
Oh, great question. I think just be shameless around who y'all reach out to. I think using like as much of a warm network as possible, but really just reaching out to people on LinkedIn, reaching out and talking to investors. Most people you'll find are so open to chatting and sharing if you can just get to them. And I think the tools exist now to be in contact with incredible investors, incredible other founders. Find your version, listen to a podcast and find out that Rad Ladies exists, and then find your way to somebody that's part of that. And more of these communities hopefully exist. But I think, again, it's not slamming your head against a wall, making your business work, but nobody's listening. It's get in touch with the people who can help you move the idea forward. And I think that takes like going to trade shows, going to drinks, like networking, go everywhere and spread the seed and just see who the world pulls back into your orbit that will help you move things forward. Because a little cosmic, but the right people will find you. The right things.
I'm all about the woo. I love a little woo. And if I could give Caitlin back her flowers, if my strength is working room, Caitlin's is getting in front of anyone. She'll be like, of course we can get in front of the chief of staff of the Melinda Gates Foundation or whatever it is. And her husband, Steven, is always, what makes you think that you can talk to that person? And Caitlin's like, why would I not be able to get in front of that person? So LinkedIn, it's 6 degrees of separation, 1, 2, 3, 4, 5, but it's true.
Yeah. Everybody wants to talk. Everybody wants to chat. And like you, Caitlin, kudos to you. So like hard and soft skills, but it's also fun to talk to people that have a curiosity and an interest in things rather than an agenda. So it's like, just share your interests with the world and see what comes back.
So great advice.
Yeah. This has been incredible. Thank you so much. We are so thankful that you joined us.
Thank you, guys.
So much information. I know Lundie and I are going to take this away and then sit on it and then come back to the table and figure out what else we need to chat through. But it's been amazing and we're so thankful. So thank you so much. And we hope you enjoy the beautiful view behind you.
Yes, truly. Next time, drinks on us.
My whole table. So
drinks and Taylor Swift chats on us next time we're in the city. But thank you so much. This has been amazing.
And welcome to the Debrief, where we discuss things we needed a little more clarity on.
Here
we are. If anyone's watching from home, this is what you get. Also, we had guests in the guest room. The bed behind me isn't made. It's a Monday. It's a Monday. But we're here.
It's a Monday. Hey, well, we loved Anna.
Loved Anna. She's amazing. Yes. I mean, even with being in relatively kind of like the same space as her, I learned so much. And
She's an actual expert, and she is like around the same age as us, which is very cool, and just has so much experience. And it really shows you what happens if you really choose a career and stick to it.
yeah, I know, because she's been with the firm, the same fund, for 7 years. So she's clearly, climbed the ranks.
Okay, cool. Do you want to start? What were your questions or takeaways?
Yes. So I think takeaway really from the conversation is that venture capital focuses for the most part on earlier stage companies and therefore can be quite risky because you're essentially, Anna said, you're placing a bet on a horse. You're choosing a horse that you think is going to do something different or faster or better or cheaper in the marketplace. And then as an investor, you're placing your bet on that horse with the hope that they make it and therefore you make more money. So I think if everyone listening can walk away with at least that baseline knowledge of that's what people are talking about with VC, then that's good enough for me. I think the other two kind of takeaways for me is that one, venture capital is not for everyone. It's not something that the everyday person
Totally.
should or can get into. It's
Totally.
basically a
Gamble.
occupation. Yeah, well, it's a gamble, but it's also it's an occupation. That being said, the three of us didn't have financial backgrounds and we all entered it from a working perspective, not from a personal investment perspective. So if you're interested enough, there is space. And my third takeaway is that your network is really your net worth. I don't know if you've ever heard that term. Network equals net worth, because a lot of this comes down to not what you know, but who you know, which is oftentimes actually an unfortunate reality because a lot of people, don't grow up in the space or aren't exposed to the people and the decision makers in the space. We talked about how women need to be more so at the table as decision makers, and therefore they'll probably support more women, etc. And if you don't have that existing network, then get moving on it. And I think Anna said, be relentless around outreach on LinkedIn, use all the online forums available, and get in the room by whatever means necessary. Caitlin's specialty. The 6 degrees of separation. Go down the list, see who can make introductions. And that's if you're looking for capital on either side, I suppose, if you're raising as a founder or if you are investing.
Exactly. That really ties into mine. My biggest, I think, takeaway for this. Steven's calling me. Nope. Not for
Not
you.
now, Steven.
Okay, so that actually brings me to mine. And my biggest takeaway from this is venture capital investing is gambling. You're ultimately gambling, and you're doing the best that you can to look at all the variables and try and make some kind of formula out of it to figure out, like, how do we crack this? How do we find the best business? But there's so many variables, from founders to markets to where you're playing, being like which country you're in, how big is the demographic you're targeting, that ultimately it is a gamble. And especially what she said at the beginning, where if you're investing at really early stage, so sometimes even if someone just has an idea, people take a spray and pray approach, meaning they invest in tons of businesses, hoping that one or two will make it big and then pay for all the losses of all the others.
Right.
So I think that's just something to take into consideration. We talked about angel investing, which anyone can do. It means writing a check for a friend, or there's all these angel forums where you can find people who are fundraising online, but just really thinking about it through a lens of, is this money that I can lose, and how much do I trust this person that I'm investing in? Because it ultimately is a gamble. If one out of 10 or even 1 out of 100, you have a 1% chance of making it big, it's a big risk. So that was my biggest takeaway from this, and that I wanted to reiterate after, because I think it's really important for everyone to take it in. Sometimes you can get excited about the big wins, about the poppies that just sold for billion X dollars, or the Canvas that valued at 62 billion, and you can make all this money, but not everyone makes all that money, and actually very few people do. And so just something to keep in mind. That being said, Anna is so cool. Consumer goods is a very cool space.
Yeah.
You and I don't touch it at all. We're very fintech focused in our world, and hearing about consumer goods was so fun for me because it's just such a different place. And I'm like, wow, it is fun to be able to interact and play with the products that you use on a day-to-day basis. That would be so fun for me. And it's just like kind of opened up my mind to, there's just so many possibilities of what you can do for your job.
I know. It's true. I know. And the fact that she fell into that, she said it wasn't something that she initially pursued. It's a big old world out there.
I know it was funny. Anna and I know each other because we're both in this young leader circle for Milken. And the first time I went, they took all of us on a hike. And I was hiking next to this guy who was so sweet and so nice. And he was in venture, and he was doing everything from consumer to fintech. He had a pretty broad spectrum. He's based in LA. And we're hiking, and we're talking about different cool deals that we're doing. And I was talking about the deals happening in Africa. And then he started telling me about his deals. And he was like, yeah, we got in on Rihanna's companies, and like listing all these really big businesses. And for people listening, getting in on those deals, meaning being able to invest, is really hard because they're strategic about who they choose that they want to be investors in them. And ultimately those investors help them grow, which is what Anna spoke about. If there's something like a big movie star or artist who is launching something, it can be a really attractive deal because already they have brand presence and they don't have to build that from scratch. So there's a higher potential it's going to succeed. And so he's telling me this about getting into Fenty Beauty, and I'm like, what the heck? How did you get into those deals? And he's like, oh, our lead investors are the people who put the money in our fund are famous. And I was like, what does that mean?
Who are they?
Exactly. I'm like, excuse me, sir, who are you talking about? And I'm like, who could this possibly be? And he goes, oh yeah, the person who started our fund is Jay-Z. I was like,
You're like,
correct.
Cool. Yeah, we're over here doing like little tiny checks in Africa.
Electric motorbikes in Africa. And
which is cool in its own right, but very different from,
But it was just such a crazy, and to the point of what I was saying earlier, listening to Anna talk about all the cool brands she's doing, it's so different than what you and I do on a day-to-day basis, focusing in Africa. And it's equally as interesting, but it's got this like shock factor and wow behind it because we don't do it on the day-to-day and we don't touch those things. And it's so like all who can touch this space, even consumer goods, it's just so Hollywood. So I loved it for that. I loved that like exposure to a world that we don't have and products that we would never be able to interact with on a work basis, just in the realm of what we do.
Yeah, totally. I know. It was super interesting. Learned a lot. And hopefully you guys did too.
Yes.
And
okay. And
see you guys next week.
Knowledge is power. Knowledge is power. Let's fucking go.
Let's fucking go. Thanks, guys.